Question number 33. Fernanda discuss the acceptability of Fernanda Company's decision not to record any liability for the roof collapse in the consolidated financial statement for the year ended 31st of December 17. Discuss the acceptability of Fernanda's decision. ठीक है. Fernanda. Fernanda Company is a group which constructs industrial properties. In September 17, a section of the roof in the building constructed by Fernanda partially collapsed, injuring 10 people. Production, which was taking place inside the building, had to be stopped. However, no legal action had been brought against Fernanda as at 31st of December 17, as accident investigators were still trying to find out the reason for the collapse. The investigators were assessing the responsibilities of various parties involved. With the report expected in February 18, the extent of the damage and the details of any compensation payments to be made has not yet been determined. Fernanda felt that given the current stage of investigation into the accident, there was no requirement to record any liability in the consolidated financial statements as at 31st of December 17, especially as Fernanda felt that any compensation payable would be covered by insurance. Hmm. 7 mark के लिए ना. Was taking place inside the building had not been stopped. It's been brought against Fernanda. According to IAS 37, provisions, contingent liabilities, and contingent assets, a provision is recognized when uh, a provision is recognized when there is a present obligation as a result of past event, when it is probable that economic outflow of resources will take place, and to which a reliable estimate of the expenditure can be made. However, a provision has to be recognized whenever there is a constructive or a legal obligation. In the current scenario, we can see that when the roof collapsed, there was no legal or constructive obligation, or there were no indications of any legal or constructive obligations to make a provision, and thus a provision will not be recognized. A contingent liability is recognized when the outflow of economic benefits is uncertain regarding an uncertain future and dependent about an uncertain future event that will take place. So, here also we can see that the investigators are still assessing the responsibilities of the various parties involved with the report expected in February 18. The extent of the damages and details of any compensation payments to be made has not yet been determined. So here also we can see that the investigators who are assessing the responsibilities have not yet analyzed the extent of the damages and details of compensation payment to be made yet. Thus, uh, Thus, there is still a question mark about whether an outflow of economic resources will take place or not, but it is dependent upon the investigator's decision. Thus, it is important for Fernanda Company to report a contingent liability at the year end, because it is also uncertain that whether Fernanda Company's compensation would be payable by the insurance, that if Fernanda Company is liable to pay the amount, and whether the insurance company will pay for that or no is also uncertain. They felt that given the stage of investigation and accident, there is no requirement. Thus, Fernanda Company's statement that there is no requirement to create uh, any liability in the consolidated financial statement is incorrect. बता देंगे. IAS 37 conditions for establishing a liability are not fulfilled. तो ये देखो ये उन्होंने बता दिया. Entity present or because of a past event, probable outflow of economic of resources embodying economic benefits will be required to settle the obligation. In accordance with IAS 37, the conditions of establishing a liability are not fulfilled. At 31st of December 17, there was no present obligation for Fernanda Company. The conditions for establishing a liability are not fulfilled. There is no present obligation for Fernanda. No legal action had been brought in connection with the accident, and the accident investigators were still assessing the responsibilities of various parties. It was not yet probable that the outflow of the resources embodying economic benefits would be required to settle the obligation, as the extent of damage and the details of any compensation payments to be made had not yet been determined. Also, a compensation were payable to third parties by the issuer. The insurance is expected to cover the amount payable. तो ये इसलिए हम लोग इन सारी रीजंस की वजह से प्रोविजन रिकॉग्नाइज नहीं कर सकते, क्योंकि एक तो प्रेजेंट ऑब्लिगेशन एज ए रिजल्ट ऑफ पास्ट इवेंट नहीं है. उसके बाद ये प्रोबेबल नहीं है क्योंकि अभी तक इन्वेस्टिगेशन चल रहा है और एस्टिमेट अमाउंट तब तक आया ही नहीं है. However, Fernanda should disclose a contingent liability, जो हमने बोला, unless the possibility of an outflow of resources embodying economic benefits is remote. There is a possible obligation as decision's outcome is determined by the accident investigators and not Fernanda Company. There is level of uncertainty attached to the investigation of the accident. There is level of uncertainty attached to the investigation of the accident relating to the nature and the liability of individuals. The extent of the damage and any compensation which may be payable remains to be established. Extent of the damage and any compensation which may be payable remains established. The degree of uncertainty is not such that possibility of outflow of resources can be considered remote. मतलब वो इतने छोटे भी नहीं है कि हम लायबिलिटी ना ही रिकॉग्नाइज करें, और इतना ज्यादा सर्टन भी नहीं है कि हम प्रोविजन रिकॉग्नाइज करें. इसलिए हम लोग कंटिजेंट लायबिलिटी क्रिएट करते हैं, विच इज फाइन. तो ये हमने बराबर बोला था. आगे बढ़ते हैं. Discuss the acceptability of Fernanda's decision in the consolidated financial statements to disclose a contingent liability for the estimated cost of redeeming the put options and to record a non-redeemable preference shares as equity rather than compound financial instrument. Put options के बारे में सबसे पहले बात करनी है ना. On 1st of January 17, as a result of business combination, Fernanda has written put options to purchase non-controlling interest shareholding in a newly acquired subsidiary, Runda. This means that Fernanda Company would be obliged to purchase non-controlling interest shareholdings in the subsidiary if the put options are exercised by the non-controlling interest shareholders. At 31st of December 17, Fernanda disclosed the contingent liability in the consolidated financial statements of the estimated cost of redeeming the put options. On 1st of January 17, the result of business combination. First of all, whenever there are हाँ पहले अपन बता देंगे IAS 37 से कॉपी पेस्ट करके कि अपन कंटिजेंट लायबिलिटी कब बताते हैं, when there's an uncertain future event that is going to determine the outflow of economic benefits that is going to take place. However, in the current scenario, we can see that there are put options, and thus we are obliged to buy the non-controlling interest shareholdings. Therefore, it is not an uncertain future event. Thus, to disclose as a contingent liability is completely invalid. Next one, अपन ये बताएंगे कि in put options, an entity is obliged to purchase its own shares. Put option shareholding to purchase non-controlling shareholding in the newly acquired subsidiary. अच्छा एक मिनट, not our own shares. In a put option, an entity is obliged to purchase the shareholding in a particular entity, and thus there is certainty, and so a financial liability should be recorded. According to IFRS 9, financial instruments, a financial liability arises when there's a contract when there's a contractual obligation to deliver cash or a financial asset in order to acquire इन ऑर्डर टू पे, ऐसा नहीं, इन ऑर्डर टू एक्चुअली ऐसा नहीं है. There's a contractual obligation to deliver cash or cash equivalents, just financial assets, uh, in order to pay off the obligation, ये बोल सकते हैं. So in this scenario also, when we have to purchase the non-controlling interest shareholding, we have to pay an amount in order to gain the shareholding, and thus this should be recorded as a financial liability in accordance with IFRS 9 financial instruments. Check कर लेते हैं. Fernanda's treatment of non-controlling interest put options as contingent liability is not in accordance with IAS 32 financial instruments presentation. They have said IAS 32 presentations. लेकिन हमने actually definition बोला था by if we go by the IAS, तो हमने खाली definition बोला था. हाँ, in accordance with IAS 32 नहीं है, वो ठीक है presentation. This standard states that the contract which contains an obligation for an entity to purchase its own equity instruments, equity instruments, the standard which contains an obligation for an entity to purchase its own equity instruments for cash or another financial asset, gives rise to a financial liability for a present value of the redemption amount. The non-controlling interest put options are contracts which contain an obligation for an entity to purchase its own equity instruments for cash. Were contracts which contains an obligation for an entity to purchase its own equity instruments for cash. The financial liability should be recognized in the statement of financial position. The financial liability should be recognized in the statement of financial position at 31st of December 17 rather than disclose the contingent liability in the notes to account. तो ये अपन ने बिल्कुल सही से बोला था. आगे बढ़ जाते हैं. Record non-redeemable preference shares as equity rather than compound financial instrument. In order, in addition, partly fund, in order to partly fund the purchase of the subsidiary on 1st of January 17, Fernanda issued non-redeemable preference shares and recognized them as equity instruments in the consolidated financial statements at 31st of December 17. Preference shareholders receive an annual fixed cash dividend of 5% and a participating dividend of which was 7% of the ordinary dividend. Fernanda Company stated that the financial instrument had the characteristics of equity capital as it provided for participation in the future income of the company. Fernanda Company concluded that compliance with IAS 32 financial instruments presentation would be so misleading that it would conflict with the objective of financial statements set out in the conceptual framework. Fernanda Company considers the classification of preference shares to be equity rather than compound instrument. तो सबसे पहली बात तो we will start the answer with that's the same way they started the previous answer कि Fernanda Company uh, Fernanda Company's decision of recording the instrument as a equity the non-redeemable preference shares as equity instrument in the consolidated financial statements as at 31st of December 17 is not in line with the IAS 32 financial instruments presentation. Non-redeemable preference shares has the characteristics of both financial liability and an equity, and this is a compound instrument. तो जो भी अपन ने financial liability के बारे में बोला था वो अपन ऊपर से copy paste करेंगे. Equity के बारे में लिखेंगे कि an equity instrument is an instrument that shows us uh, the residual interest in the assets of an entity after reducing its liabilities or net assets of an entity. Uh, as the preference shareholders receive an annual fixed cash dividend of 5% and a participating dividend of 7% of the ordinary dividend. Thus, there is a contractual obligation to pay off cash, and thus the major part of that non-redeemable preference share should be treated as a financial liability. This will be recorded as the economic outflow of cash that is going to take place over the years to brought back to their present value. तो उतना पहले बता देंगे लायबिलिटी. तो वो आउटफ्लो दिखाता है तो इसलिए वो फाइनेंशियल लायबिलिटी है. by bringing it back to the present value, and then showing it, and then summing up the values that will give us the financial liability. When it is reduced by the total liability, we'll get the value of equity. Once we get the value of equity, um, yeah, then we have both the values, and then it will be recorded on the liability side of the equity and liability side of the statement of financial positions. Thus, by showing, अपन ये भी बोल सकते हैं कि by showing the entire sum as equity, the Fernanda company is improving their gearing ratio वगैरह, ये सब भी बोल सकते हैं। क्योंकि 7 मार्क का है तो आंसर बड़ा है, वो नहीं 6 मार्क का है, ठीक है, 6 मार्क के लिए ठीक है। Fernanda company concluded that compliance with IAS 32 is completely, this statement is completely incorrect, as IAS 32 financial instrument presentation is only fairer, and IAS cannot overlap each other, maybe. But nahi, IAS 32 financial instruments presentation is only the fair presentation in accordance with conceptual framework. Compound in instrument. Fernanda company should have applied IAS 32 to the non-redeemable preference shares and not invoke exception in IAS 1 presentation of financial statements. IAS 1 acknowledges that in extremely rare circumstances, management may conclude that compliance with the IFRS standard requirement would be so misleading that it would conflict with the objective of financial statements set out in the conceptual framework. In such a case, the entity is required to depart from the IFRS standard requirements, uh, with detailed disclosure of nature, reasons, and impact of the departure. Uh, equity instrument is an equity instrument is any contract which evidences a residual interest in the assets of an entity after deducting all of its liabilities. A financial liability is a contractual obligation to transfer cash on another financial asset. A compound financial instrument is one that has characteristics of both. Then the obligation to transfer a fixed annual cash dividend meets the definition of a financial liability. However, it can be argued that the preference shares have both an equity and liability component, as the holders have the right to the participating dividend. IAS 32 requires separate presentation in an entity's statement of financial position of liability and equity components of a single financial instrument. Under IAS 32, nearly all of the carrying amount of the non-redeemable preference shares would be treated as a liability component. आपने बोला most of the heavy amount will be treated as a liability component, which is also okay. Due to entitlement of the fixed dividend, the carrying amount of the equity component would be the residual amount after deducting the separately determined liability component from the fair value of the instrument as a whole. तो हमने जो बताया था वो सब प्रेजेंट वैल्यू पे लेके आके माइनस करके देन सब सम अप करके, सो दैट इज हाउ वी फाइंड आउट द लायबिलिटी कंपोनेंट. A fair presentation a fair presentation could have been achieved by treating the instrument as a compound instrument in accordance with IAS 32 and providing additional disclosures to explain the characteristics of the preference shares. ये भी हो गया. लास्ट पार्ट वही है ना, इन्वेस्टिंग एंड फाइनेंसिंग, ठीक है. In accordance with IAS 7, Statement of Cash Flows. Explain the importance of distinction between classification of cash flows from investing activities and cash flows from financing activities. पर कुछ दिया हुआ है क्या हेल्प करने के लिए? Financial instruments. On 31st of December 17, Fernanda Company sold its entire holding in a subsidiary company, Interactive. Fernanda Company had loaned $3 million to Interactive Company on 1st of April 16, and this remained outstanding after its sale. Okay. As a result of loan, the former subsidiary was recorded in the consolidated financial statements at 31st of December 17. Therefore, Fernanda Company presented the full amount of the loan as a cash outflow in the investing activities in its statement of cash flows at the date, despite the fact that there had been no cash movements on the loan during the period. Investing activities showed a cash inflow of 2 million. This was made up of 10 million cash received in consideration of the sale of subsidiary, less 8 million paid to acquire the shares of a newly acquired subsidiary, Yunda. Cash and cash equivalents by interactive company at the date of disposal with 3 million. fuck ब्रो, सबसे पहली बात तो हमें बस बताना है डिस्टिंक्शन इन दोनों के बारे में, फाइनेंसिंग एक्टिविटीज और इन्वेस्टिंग एक्टिविटीज में क्या आ जाता है. In cash flows from investing activities, the activities which have been conducted in order to acquire or dispose of a subsidiary are being recorded. Um, the share in profits of an associate are also recorded. The dividend received from associate is also recorded. So, मतलब these all things are recorded. This helps the investors in knowing how much investments have the company made. How much the investment has the company made, and how much returns would be generated from these investments. From the in the financing activities, uh, examples such as items such as repayment of loan, or what is the current loan at this point of time in the company that the company has taken in order to finance its activities, are being recorded. This helps the investors in knowing how much risk the company is under, uh, how much debt the company has to pay in the near future. ये सब पहले वो चेक कर लेगा. ठीक है. Investing activities are the acquisition and disposal of long-term assets and other investments not included in cash equivalents. IAS 7 statement of cash flow states that the separate disclosure of cash flows arising from investing activities is important because the cash flows represent the extent to which expenditures have been made for resources intended to generate future income and cash flows. Only expenditures which result in a recognized asset in the statement of financial position are eligible for classification as an investing activity. Only expenditures which result in a recognized asset in the statement of financial position are eligible for classification in investing activities. वही चीज इन्होंने बताई है. Intended to generate future income and cash flow. But they चला है ना, which present extent to which expenditures have been made, and for resources intended to generate future income in the and cash flow. मतलब ये इन्वेस्टमेंट जो हमने कंपनीज में किया है वो अपने को किस कैसे रिटर्न देगा वो अपने को पता चलता है. Financing activities are activities which result in changes in size. Financing activities are activities which result changes in size and composition of the contributed equity and borrowings of an entity. Separate separate disclosure of cash flows arising from financing activities is important because it is useful in predicting claims on future cash flows provided of capital to the entity. The future cash flows by providers of capital to the entity, because it is useful predicting the claims on future cash flows provided by the classification of the entity. Outline the circumstances where cash flows may be reported on net basis. Okay. Oh. Where item is of the same nature, when the transaction is with the same party, um, net basis पे और कब दिखा सकता है? When it comes under the same financial year for the same subhead or the head. Hmm. When loan has been taken from a particular bank, and the payment also takes place subsequently, ये हो सकता है. चेक कर लेते हैं. नेट बेसिस. Cash flows arising from the following operating, investing, and financing activities may be reported on net basis. Cash receipts and payments on behalf of the customers when the cash flows reflect the activities of the customer rather than those of the entity. Okay. The customer when cash flows reflect activity of the customer and the entity. मतलब अगर सेम पे रिसीट और पेमेंट कस्टमर के साथ हो रहा है तो cash receipts and payments of our items in which turnover is quick, the amount is large, and maturities are short. The amount of cash generated to acquire control of a subsidiary, the amount of cash transferred to acquire control of a subsidiary is presented net of the subsidiary's cash and cash equivalents balance. Okay, ये बहुत सही पॉइंट है कि जो भी अमाउंट हम लोग सब्सिडरी को परचेज करने के लिए देते हैं वो उसको हम लोग नेट ऑफ करते हैं अगर सब्सिडरी के पास कुछ कैश और कैश बैलेंसेस होंगे तो. Similarly, the cash proceeds from disposing of the subsidiary are presented net of the similarly cash proceeds received from net of the subsidiaries कैश मतलब अगर सेम चीज अगर हमने सब्सिडी को बेचा तो उसके अंदर जो कैश बैलेंसेस होंगे वो निकल जाएंगे और हमको कैश बैलेंसेस मिलेंगे तो उसको अपन नेट ऑफ कर सकते हैं सो rather than giving examples of financing activities as I gave they have given examples of investing activities which are much better cash generated from operations is commonly presented as a net figure on the face of the statement of cash flow with further detail provided in accompanying disclosure notes. Cash generated from operations is commonly presented as a net figure. ओके राइट बिकॉज लाइक वो ऑपरेटिंग एक्टिविटीज के बाद का जो फिगर रहता है वो बोल रहे हैं लोग कि वो नेट फिगर दिखाया जाता है इन द फेस ऑफ द स्टेटमेंट ऑफ कैश फ्लो विथ फर्दर डिटेल प्रोवाइड अकम्पनिंग इन द डिस्क्लोजर नोट्स तो बाकी सब जो भी हम करते हैं वो सब डिस्क्लोजर नोट्स में दिए जाते हैं ऑपरेटिंग एक्टिविटीज के सारे चीजें आगे discuss the issues with Fernanda's company's treatment of cash flows for the year ended 31st of December 17. Result of loan on the former subsidiary रिकॉर्ड एक मिनट ना फर्नांडा ने एक तो सेल कर दिया एंटायर होल्डिंग ऑफ सब्सिडरी इंटरएक्टिव फर्नांडा लोन 3 million टू इंटरएक्टिव तो एक तो हमने उसको जो लोन दिया था अभी वो हमारा निकल जाएगा एज अ रिजल्ट ऑफ द लोन to the former subsidiary was recorded in the consolidated financial statements at 31st of December 17. Therefore, Fernanda presented full amount of loan as a cash outflow in the investing activities in the statement of cash flows. ठीक है the date, despite the fact that there has been no cash movement on loan during the period. Investing activities showed a cash inflow. Investing activities ने cash inflow दिखाया 2 million का, which was made of 10 million cash received as a consideration. So see, here in this scenario, हमने वो चीज investing activities में दिखाई हुई है कि हमको पैसा कंपनी से मिला 10 million का जो हमने बेची. Received consideration of the sale of subsidiary less 8 million paid to acquire the shares. इन रुंडा तो बेसिकली हमने 10 million की कोई और सब्सिडरी बेची और हमने 8 million की कोई और सब्सिडरी खरीदी सो वी कैन नॉट शो दिस एज अ नेट फिगर वी हैव टू शो दिस एज सेपरेट लाइन आइटम्स ठीक है ना सो दैट इज द मिस्टेक दैट वी मेड ये जो 3 million हमारा कैश गया इफ दैट वुड हैव बीन रिड्यूस फ्रॉम दिस 10 million का अमाउंट देन दैट वुड हैव स्टिल मेड सेंस ठीक है ना चेक कर लेते हैं देखो फर्नांडा कंपनी The loan between Fernanda and Interactive was previously an intergroup balance and so would be eliminated from the consolidated financial statements. As a result of the sale of Interactive, the loan must be recorded in the consolidated statement of financial position at 31st of December 17. हाँ अब जब वो हमने हमने सब्सिडरी डिस्पोज ऑफ कर दी है तो अब वो लोन टू अ सब्सिडरी नहीं रहा अब वो लोन टू टू अ कंपनी मतलब टू क्या बोलते हैं टू एन आउटसाइड कंपनी हो गया है सो इट इज नॉट अ इंटर कंपनी लोन एनीमोर सो दैट शुड बी रिफ्लेक्टेड इन द फाइनेंशियल स्टेटमेंट्स और वही चीज अभी कैश फ्लोज में भी आ सकती है राइट तो अभी चेक कर लेते हैं कि उन्होंने वो वहां से माइनस की है कि नहीं द मूवमेंट इन द कैरिंग अमाउंट ऑफ द लोन फॉर द ईयर is therefore non-cash transaction. Fernanda company has incorrectly shown the loan amount as an outflow. Fernanda company has incorrectly shown the loan amount as an outflow in the investing activities, so this would be removed. ये अपने को निकालना पड़ेगा. The recognition of the loan in the consolidated financial statements would reduce the profit recorded in the disposal of the subsidiary. This profit should be eliminated when calculating cash generated from operations. ठीक है कैश रिसीव फ्रॉम सेल ऑफ सब्सिडियरी 10 million was incorrectly shown in the investing activities as it should have been reported net of cash and cash equivalents disposed of 3 million तो उसको 7 million का शो करना चाहिए था as recorded under IS 7 उसके बाद in addition the cash flow affects the losing control should not be deducted from those of obtaining control therefore cash from sale of subsidiary 10 में तो इसलिए वही बोलना चाहते हैं कि ये 10 में नहीं करना चाहिए था these should be separately presented तो इन्होंने कैसे बोला कि effects of losing control मतलब effects effects of losing a subsidiary and gaining a subsidiary उस मतलब two different subsidiaries should be shown as two separate line items rather than showing one single line item बस वही इन्होंने बोला है The acquisition of Runda should be shown as a cash outflow in investing activity. There is 8 million net of cash and cash equivalents which have been acquired. The disposal of the interactive company should be shown as a separate cash flow. The disposal of interactive should be shown as a separate cash flow, cash inflow, and net of cash which has been disposed of within the subsidiary. Disposal of interactive company should be shown as a separate cash inflow. Of company. सेपरेट कैश इनफ्लो। हाँ बराबर, तो वो 7 मिलियन जो अपन ने ऊपर बात की थी 10 - 3 की, वही 7 मिलियन इन्होंने यहाँ पर शो किया हुआ है। ठीक है। थैंक यू, बाय।